So proof of stake mining came about in response to the inherent inefficiencies of proof of work mining, right? Proof of work mining entails a great deal of energy consumption, and predicated upon the price of Bitcoin, what would typically happen is, in order for miners, proof of work miners, to recoup and show profit, the coin that they would mine, they would later sell or immediately sell, and that would put downward pressure on the market. But they had to sell it because of the inherent cost involved with proof of work mining. So that brought about proof of stake mining, which in the simplest of terms allocates the block rewards based on the staked coin, right? So at a very high level, if you had 3% of the available coin, you would be able to mine 3% of the available coin, right? And it's a great way to do it because you don't run into that inherent problem of energy consumption with proof of work, and as like a market factor, it doesn't weigh heavily on depressing the price of what you're mining, right? It becomes counterintuitive, proof of work does, especially when you look at halving and like what's going to happen when block rewards become harder to come by. It's going to require more computing power, the algorithms become more difficult, requires more power, but it also gives you a great incentive, gives the miner a great incentive to sell and then bring the price back down. So you kind of fall into this sort of paradox, right? But it raises an interesting issue because proof of stake mining pools in many cases require the participants to stake their coin. And from the perspective of how that works, it looks a lot like an investment contract, like a partnership. While there may not be a structure or some formal kind of agreement, it effectively is, or could be construed to be, a securities offering, right? And that partnership that you're creating is formed because you're coming together for a common enterprise, and you're staking coin or effectively investing coin for purposes of creating the mining pool. So it's an odd thing, and a lot of people don't think about it because when you think of mining, you think of, do I have money service business issues? Do I have concerns with money transmission issues at the state level? And you typically don't, because the exchange or handling of cryptocurrency is sort of incidental to the mining, right? It's not a direct exchange. But I think on mining pools, especially stake mining pools, you definitely have a securities issue, and then you have like a common law partnership issue, because whether you have that structure formally created or not, you're effectively creating a general partnership, which is like an unregistered partnership that is, typically just between people agreeing to become partners, and you're tacitly agreeing by staking your coin. So, in a lot of these partnerships, especially in the proof of stake mining world, if you're the one who's the promoter of that mining pool, right, you're effectively a general partner, and there's a great deal of fiduciary duty responsibilities, there's a great deal of liability, right, for the performance thereof and for the safety and custody of the coin being staked, and so on. So it's an interesting concept, and you see a lot of proof of stake mining pools out there, but none of them are structured, in my mind, properly, right? They really need to be, I think, out of an abundance of caution, as partnerships. And if in fact they are a partnership and the staking represents your investment into that partnership, the question becomes, what securities exemption, right? Because it's a private sale of securities, the partnership interest is. What exemption under the Securities Act are you following, right? Is this like a Reg 506C where you'd have to, limit this to accredited investors, right? Like, how does a non-accredited novice small investor participate in these pools? And it's a question that probably takes a far more greater analysis than what the time I'd actually otherwise devote here. But it's something to consider if you're starting a mining pool, and especially a proof of stake mining pool, because you're creating a de facto investment partnership, whether you believe you are or not. So that's my take. If you have questions or you're into proof of stake mining, I'd love to hear your take and how you feel about it. But happy to always answer your questions. Check me out, Adam Tracy, TRACY.io, and Adam at AdamTracy.io. I'll talk to you later.